Hey, it's your host Rose here with another edition of Hot Stock Picks of the Week, where we'll be bringing you the latest updates on the hottest companies here in North America. Oh, what I would give right now to be on a plane going to the many warm destinations I can conjure in my slumber. Well, I'm sure many of you, like myself, are itching to continue with your much-awaited travel plans, but thanks to COVID and its resulting restrictions, travel is another industry that has taken a hard hit. But with the vaccine out now, the question is, are we heading into a period of heavy travel demand? Money managers like Kyle Bass seem to think so, as he expects unprecedented travel demand when restrictions ease up. But when will that be? We'll get to that in just a moment. Meanwhile, in the US, Congress has bailed out airlines a few times. Air Canada has received a $400 million plus wage subsidy through the Canada Emergency Wage Subsidy, but wants more to survive. So there is an interesting dynamic of staying afloat due to government support, with the catalyst of return to normalcy with the vaccine. But let's look at the numbers. Air Canada trading with the ticker AC in the Toronto Stock Exchange started at $50 per share in the beginning of 2020 and took a sudden plunge at a low of $12 per share mid-March. And as much as people were bummed out about their flight cancellations, many easily replaced it with trips to the store to stock up on toilet paper. Definitely not as exotic. Air Canada has a breakout above 23.50, which was a major resistance zone, and remained stable just below the 20s, finally hitting a high of 27 in early December. Throughout January and February, though, it has continued to hold its momentum at around $22 per share. So, while there was a lot of hope for a speedy recovery going into 2021 and talks of the new vaccine, it is, however, looking like there will be a longer than expected slump and a slower recovery that may last well into the year. The company itself predicts a couple more years before even nearing pre-pandemic levels. And what does that mean for investors? It might not be that bad. The stocks are at half price right now and may possibly dip further, so it would be a good idea to hold off on buying, but keeping a close eye. Since the airline has suffered the most during the pandemic, it is safe to expect the price to return to its initial numbers eventually. But it might not be too foolish to think that the stock may dip below the 20s in the near future, and in that case, buying at a lower price tag will certainly increase your chances of making a good return. That is, for those willing to exercise patience. Well, thanks for tuning in, and if you like what you see, hit that like button and subscribe to our channel for all the latest stock updates.